Hey everybody, today we're going to talk about the price of Bitcoin. We're see the price of Bitcoin headed toward the month of July. Please read the disclaimer. You can pause this video as you read it. Okay, so last month we left off around over here. I made a video a little earlier, and my prediction was it was right here where we were hitting all-time highs. And I said that I thought everything looked really great and that we're going to have price discovery. Boy, was I wrong, right? And I'll admit that I was wrong. We ended up pulling back and just moving sideways. A lot happened that I didn't see, right? I didn't see the U.S. being pulled in to the war in the Middle East between Israel and Iran, right? And that ended up pushing the price down a little bit. Although we have recovered now, right? Now that there's a announced ceasefire between Iran and Israel. Not sure if they're going to honor that, but for now there's a ceasefire. So a lot of the stock market recovered and Bitcoin as well, right? But the question is, where is Bitcoin headed for the month of July and potentially for the end of the year, right? Right now, what I'll say is that we're holding the Fibonacci support, which is really good because, when when the war broke out, it basically pushed the price down. And we lost the 50-day moving average, which is silver line. So that is our short-term moving average. We lost that. Then we came down to this Fibonacci line. And then we sort of lost that for a while, but we had this nice candle that pumped it up. So this obviously shows that the bulls are willing to defend this, right? And so this Fibonacci level is strong support. The problem is that we have been making lower highs for a while, right? And I'll zoom into the 4-hour chart so you can see. So notice how we haven't had a higher high in a while. And this is sort of our chance to push up higher. And something that I've been talking about, if you follow me on X, my username is EddieLux_. So please follow me, and I have the details below in the description box. But I've been basically talking about how the futures, right? The futures all the way back to last month. And so about 3 weeks ago, I talked about how these two futures gaps down here, I believe they're going to fill, right? At the time, I thought they were going to fill. And it actually, the price of Bitcoin actually dropped below 100,000, right? This was, I think, last week. It dropped below 100,000, and that increased the probability that, and this is basically triggered by the news that the U.S. ended up doing military strikes on potential nuclear sites in Iran, right? So I believe that the probability that these two gaps down to 90,000 would fill. This one is around 96, this one around 92, but sometimes you overshoot, it might come down to the 90,000 level, right? But what happened was there was a ceasefire, right, that Donald Trump brokered, and that caused the market to push up higher, right, over here. And it also caused Bitcoin to move up higher. And in that move up, it actually reclaimed, not only to defend the Fibonacci support level, it reclaimed the 50-day. And in the process, created two more new gaps, right? So now my prediction, and I already said this on X, right? You can follow me on X. I post more on there pretty much every day. I do think we're going to come back and fill these gaps, at least, right? And we're going to have to see if the bulls can defend 100,000. If they can't defend 100,000, I do think that 90,000 is back on the table and will likely come down to fill before moving higher, right? I do think we end the year higher, but just not as high as people think, right? My target was about 180,000, but now I'm probably lowering. I'm thinking about lowering to 150,000, right? If we don't see a move, I'm not sure we're going to see a parabolic move. I'm looking at exchange data, and sell orders are pretty high right now. So for now, I do think that we're going to come down, fill these gaps down to 103,000, and then potentially push up higher. The bulls can defend and push up higher, and defend 50-day, right? But if not, if 100,000 is taken out again, we'll probably spend time coming down, filling these gaps before pushing up higher, and we'll probably see new all-time highs sometime in late summer or early fall, right? But if we can take out these gaps, push up higher, then we'll probably see all-time highs either end of July or August, right? And that would look, but the crucial thing is that we need to start taking out the local high around 110, right? Because like I said, we're making lower highs and technically lower lows. So we're technically in a downtrend right now, even though it's sort of been moving sideways a little bit. You notice how every bottom is a bit lower. So what I wanted to see was 110,000 taken out, right? And I actually said this about 3 weeks ago when I made the chart, when I made the futures post on X, was that this prediction down to 90K would have been invalidated if we saw Bitcoin push above 110,000. A strong close above 110,000 would have been invalidation. And we actually got to 110, right? Bitcoin hit 110, but it basically just rolled over from there and it just plunged all the way down to like 98, 99,000, right? So again, I'm still using 110,000 as my invalidation point, meaning that if we have a strong close above, maybe come down, test support, and then push up higher, I will basically call off my prediction for 90K fill down, right? But for now, all that stuff is still on the chopping block, right? On the table, as long as we continue to make lower highs, right? Again, taking out 110K will finally make a higher high, right? And of course, we need to come down to make a higher low. But again, we're still in a downtrend with lower highs and lower lows. So you have to give benefit of the doubt to the bears, right? If you look at the chart objectively. So it is what it is. But I am optimistic going forward. I do still think that the year will end up higher with new all-time highs for Bitcoin, but maybe not as high as people think. Again, I'm thinking about lowering my price target from 180 to 150, but we'll see going forward. Let's look at some of the macro data, right? We saw CPI. CPI actually went up for the month, right? But it's not necessarily a bad thing because we've seen CPI come down for the last 3 months, which is great, right? So having a little bounce is not necessarily a bad thing. It might be actually a natural thing, right? But the point is overall, we want to see CPI move towards 2%, which is the Fed's target rate, right? Because the closer it gets to 2%, the more likely they are to cut rates, right? We've been paused rates all year. So if they cut rates, that will likely give more fuel to risk on assets like stocks, and of course Bitcoin will likely rip up higher, right? But for now, we're sort of like moving sideways now, as long as the inflation data is still a bit murky, and also there's geopolitical tensions, right? We don't know if Israel and Iran are going to attack each other again. They've had these like ceasefire deals in the past and broken them, so again, these things are still these details are a bit murky, so a lot can change going forward, right? But yeah, let's look at some of the other headwinds, right? This is something I've been talking about for the past couple of videos, is that potential recession risk, right? And I sort of had this prediction where, in the 4-year cycle, every 4 years after the big parabolic move of Bitcoin, there's always a bear market, right? Usually like 2014, 2018, 2022, and potentially 2026, right? Every 4 years. Now that could coincide with a potential recession, right? Which would also bring the stock market down. Now, why would this happen, right? We've seen the 2 and 10-year yield curve inverted, right, for a long time, and uninverted last year. And this is always followed by a recession, right? All the way back to 1980s, right? And in fact, the longer it stays uninverted, it usually is like, so we had like 2 recessions here. So that is a potential scenario, either 2026 or maybe later this year, right? Another potential recession risk is the interest rates coming down, right? The Fed funds rate, usually when it coils and rolls down, when they start cutting rates after it being elevated for a period of time, this is usually followed by a recession, right? We've seen this all the way back, right? Literally every single time. So when you put these two together, they're pretty strong, like confluence of indicators that a recession risk is pretty elevated, right? So I wouldn't be surprised if 2026, which would be perfect coinciding with the bear market. And by the way, a lot of people on X, they keep talking about how like we're gonna have an extended cycle, super cycle. This is the same stuff everyone said in 2021, and guess what? We still had a bear market in 2022. Now here's the thing: if I said that my prediction for the cycle top was 150, then that means that the bear market could tank the price to way below where people thinking maybe like 75, places where we spent a lot of time consolidating, right? Maybe around this area. So that'd be very disappointing for a lot of people. But here's the thing, right? Every bear market, the retracement is a lot less every time, right? Just like the gain for every cycle has diminishing return, we're not gonna get as big percentage gains as our last cycle. Every cycle, the percentage gain is a lot less. Just like the retracement is gonna be a lot less, right? This one was about 77%. I can see us only pulling back maybe 50, 60% in the next cycle. When we have more institutional adoption, right? We have strategic Bitcoin reserve now. The president has endorsed Bitcoin. So any retracement in the bear market probably won't be as intense as like previous cycles, right? Like over here, 2018, that one felt like over 80%. So if we do get a move up to 150, a 50% drawdown, that's 75,000, right? That's around this area, right? Which makes sense because this area, we have a lot of support here. We spent 8 months last year consolidating, and it's also near the previous cycle tie, right? So I could see a move up to 150, bear market 50% drawdown to 75, and then push up to higher in the next cycle, right? But of course, that's just sort of tentative. I haven't like committed to that yet, but that's just something I've been thinking about, right? And of course, if Bitcoin just starts ripping from here, then I might have to adjust my price target higher. But I'm just saying this because a lot of people have like wild price targets, like 200,000-300,000. Some people have 500 million, but I think it's important to temper your expectations, right? What is realistic for this cycle? Bitcoin is 2 trillion market cap. What is realistic, right? So again, I'm bullish as anybody on Bitcoin long term, but in terms of short term price action, it's good to temper your expectations a little bit, right? But besides that, let's go on to looking at some of the other charts indicators. 2-year multiplier is one of the favorites that I like to use because it's very simple to visualize, right? If it's above this orange red line, it's overbought. If it's under this green line, it's oversold. And I've been making videos consistently every month since 2023, right? So, and I've been talking about since 2023 when we were below, when Bitcoin was below this green line, that this might be a good opportunity to buy, right? Not financial advice. And in hindsight, it was a great opportunity to buy. Like we're up multiples, right? Multiples. And but at the same time, we're still in the middle of this channel, which is sort of the same posturing as being in a bullish uptrend, right? Now, of course, we know that every cycle has diminishing returns. So we probably, the last cycle we didn't go above this red-orange line. So we're probably not going to get near it. But even not getting near it, getting somewhere in like 3/4 of the way through is still like, again, in the high 100,000s, like almost 200,000. So if we can get just up to that level before topping, that could be a really great return, right, on your investment. Pi cycle top indicator, again, this is really great when the price is moving parabolically, but I've been thinking that maybe this cycle we might not see a parabolic move. Maybe because we've been seeing impulse move and then consolidations. That's sort of been the price action that we've been seeing, right? The patterns that we've been seeing this whole cycle. Move higher and then consolidation, move higher, consolidation, move higher, consolidation. So maybe we don't see a parabolic move that pushes the orange. So the traditional top signal for Pi cycle top indicator is when the orange line goes above the green line, and that prints a line, dotted line, that tells you to sell. Now, if we don't get a big move above that this cycle, then it's possible that this will never cross. But if it gets close enough to the green line, that could be a potential sell signal. So, of course, this is something that hasn't happened before, but it's something to think about looking forward if that is a potential sell signal, right? Last thing we'll think about is forecast tool. This combines all these different top bottom indicators, again, to give you an easy visualization of where we might be in the cycle, in the trend, right? And of course, we're in the middle. We haven't hit any of the overbought or oversold. So it seems like this trend will likely continue. The lowest band is 204,000. So again, potential upside, right? But again, keep in mind that every cycle, if you can see, it doesn't go up as high. It doesn't. So this cycle, we might not even touch the band. So if it's 224, we might not even hit 200,000, maybe just below 200,000, right? My original prediction was 180. And again, depending on how the price action develops for the second half of the year, that might have to adjust that down, or maybe increase that if Bitcoin starts moving a lot. But if Bitcoin keeps moving sideways like it is right now, then I might have to adjust my price tracker down a little bit. But yeah, just to summarize, as we wrap up this video, Bitcoin short term is in a downtrend, okay? Lower highs and lower lows, undeniable, right? We can't, let's just not sugarcoat that, right? Now, the good news is that we defended the Fibonacci support level, and we also reclaim the 50-day moving average. These are our short-term and major support levels. So there is still hope, but we really need to reclaim 110,000 because by doing that, we'll start to make higher highs, which is something we haven't done since we sort of peaked at all-time highs back in May, right? We make higher highs, potentially come down, higher lows, and then push up higher, right? But we're still technically in a downtrend, so we need to reverse that ASAP. Another thing I'm talking about is these future gaps, right? All the way down to 90,000. Right now, the probability is in the bull's favor as long as they stay above 100,000, right? But I am predicting a move down to fill these two gaps down to 103,000 before potentially push up higher if the bulls can defend 100,000, right? If the bulls can't defend 100,000, then we'll likely come down and fill these two gaps down to 90,000. That is going to be on the table again. But generally speaking, when we dipped below 100,000 last weekend, right? You can see over here, we dipped below 100,000, right? When we revisit this level, it actually makes it weaker. It makes the support weaker. So we definitely don't want to revisit 100,000. Otherwise, again, the probability of going down is going to, and filling these gaps is going to increase, right? Once we retested 100,000 support, defend that level, we don't want to return, right? Just like we didn't want to return and retest this area of consolidation last year, where we spent 8 months, right? I said, I've been making videos, again, this whole year, right? Over the last 2-3 years, right? When this came down here, I said, I don't want us to come down to this area again because we spent so much time building support that's actually very bearish. And now thankfully we found support here around the 75 and then push up higher, right? Again, same sort of reasoning, right? If we do come down, we want to stop, first of all, 100,000. If it comes down, we want to find support at 90,000, right? That's sort of like our bare minimum. If this thing comes down lower, then this might actually be the top, right? If we can't defend 90,000, the bear market actually might start. So, but again, it's too early to call for anything. Yeah, so looking forward, that's sort of my prediction is that we have to defend this level for the month of July, right? If we don't defend this level, then we'll probably come down and retest these futures gaps. But if we're able to defend the level and make a higher high above 110,000, then I can see us building support, probably just take some time, chop around before pushing up higher into the month of August, right? And of course, there's other things like, keep clicking this. That's MicroStrategy, by the way. There's other things like CPI report, right? We want to see CPI come down. That's going to increase the chances of Fed cutting rates, which will, again, give more fuel for the price of Bitcoin to push up higher, right? And again, just look out for these potential headwinds, possible recession fears, recession risks as this year proceeds to the end of the year, right? But yeah, I'll come back later in late July and we'll see what the CPI, we'll see if there's any geopolitical tensions escalate or they come down, and we'll see if Bitcoin can reclaim 109,000 or whether it's going to come down, continue this downtrend of lower highs and lower lows, push down below 90K, below 100,000, fill these gaps, right? We'll see what happens. See if the bulls can defend 100,000, right? And yeah, thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.